All right, fellow stock market jobbers. So, this market is crazy, but markets are a lot of times. We keep going up. I don't understand why, because a lot of this is based on this whole theory of like the Fed cut, blah, blah, blah. But this is a good time to think about this. As a trader, you don't want to have an opinion. I know that I know that seems kind of counterintuitive, but I'm talking to my day trading community, my short term trading community, my swing trading community. If you're a longer term buy and hold investor, this probably doesn't apply to you unless you're trying to get into a position. But things are really overbought now. This has gotten really jacked up, and it is what it is. Don't take an opinion. Just let the market tell you what to do. If you have an opinion, it's going to alter the way you think. You're going to think, oh, the market's going up, the market's going up, the market's going up. And then guess what? You go into the market, you start to trade, and there's something that might say the market's going down, but subconsciously, you might not even realize it, but subconsciously, you don't pay attention. It's called confirmation bias. And that's the stock market jobber. This is one of the main things we talk about. This is like probably, actually, I don't even doubt it. This is the most important class that we have is the psychology class. Everything in the markets is psychology. Forget your trading system. Forget Kramer. Forget this. Look at this. Why did resistance here become support here? Psychology. There are people who sold here. They thought they were, the next Stephen Cohen. The market went down. And it finally goes up. It gets back above their level. And then they're like, maybe I'm not as smart as I thought after all. It's seller's remorse. And then when the market falls back to that price, you get these remorseful sellers from here placing buy orders over here. All right. If there's enough, it turns into support. It's a very common thing in the markets. Levels that were resistance can become support. And if you know how to trade, you can make money off of this because it's pretty obvious. If you can tell which levels are important, it's pretty. I don't even need to explain it to you. If you could tell which price levels are important, you could figure out how to make money because when something gets to an important price level, it reverses or it breaks in one way or the other. It doesn't really hang out there for too long. So this is the S&P. This is really overbought. Actually, you know what? I haven't even looked at it today, so I'm going to throw on our Bollinger Bands here. I I bottom line, I would not go long in the S&P right now. Maybe it's got some more upside, but I would be more interested in kind of like watching it for a potential reversal. So let's check this out. Yeah, so this red line is what we call a Bollinger Band. This is 2 standard deviations above the 20-day moving average. We talk about this a lot, and the reason why I do is because this is a really effective. I don't know if effective is the right word, but a very insightful indicator. When statistics tell us that 95% of data should be within 2 standard deviations of the mean, the fact that this has exceeded this threshold, there's a good chance that draws sellers into the market, and they in and of themselves might push the price down. And a lot of this is just coming from Apple. And it could be like a flight to safety. People are just throwing. Oh wow, look at that! Damn, man, I would be looking for a reversal here. So here's how I would trade Apple. Most volume trades on the open and the close. You can see that down here. Look at that, right? For whatever reason, this particular price level was important. It was the high here, the high here, the high here, the higher, the close here, the open here. Now, all of a sudden, a level of importance has developed, and it's right there. And I am just going to say it's like 207. This was the closing price yesterday. That means a lot of volume traded there. This was the opening price. That means a lot of volume traded there. When a lot of volume trades, guess what? There's buyers and sellers. A lot of the people who sold are upset that the price went higher, and they tell themselves, if this gets back to my price, I'm going to buy my shares back. So there's a good chance that when this reverses, and it will, because it is so freaking overbought, it's going to bring sellers into the market. It will. I wouldn't enter the trade, but I would have this on my radar screen for a short trade, put buying. If we break this level here, 207. All right, 205, 205. That's where I buy puts. All right, everybody. Thank you so much. And, hang out, come back, because we're going to be talking about this as the market continues to evolve. And it's going to be really interesting going into the election here and inflation. I've been doing this for a long time, and these are some of the most, interesting times. Let's just put it that way. All right. See you soon, everybody.